Are you an M1 finance investor who's ever wondered, what price am I actually going to get for my buy or sell order? It's one of the most common questions on the platform. Unlike a typical brokerage where you can hit buy and get an instant execution, M1 Finance uses a unique system, the order window. And understanding how it works is key to being a successful long-term investor on the platform. The trade-off, price control versus automation. M1 Finance is designed for long-term, hands-off investing through automated features like pies and dynamic rebalancing. To offer commission-free trading and fractional shares, M1 aggregates all user buy and sell orders into a large batch. This batch is then executed all at once at specific times, the order window. This centralization allows M1 to reduce transaction costs and pass those savings to you. But here's the trade-off, you give up control over the exact price and time of your trade. How the order window works. M1 typically has two trade windows. The morning window, this is the main one, starting around 9:30 a.m. Eastern Time when the NYSE market officially opens. The afternoon window, this window starts around 3 p.m. Eastern Time and is available to clients with an M1 Plus membership or an account balance of $25,000 or more. If you submit a buy or sell order, whether it's a manual trade, a deposit, or a withdrawal, it gets queued up and executed at the market price available at the time the trade window is processed. The effect on buy-sell prices. So, how does this scheduled execution affect your price? It all comes down to price volatility during the day. You don't get the current price. When you submit your order at, say, noon, you see the market price then. But your trade won't execute until 3 p.m. for the afternoon window, and the stock price will have changed. Market orders, not limit orders. M1 uses market orders. This means your order is guaranteed to be filled, but not at a specific price. You receive the best available price, known as best execution, when the window opens. The volatility factor, if the stock price rises between the time you submit your order and the trade window, your buy order will be filled at a higher price than you expected. If the price falls, your buy order will be filled at a lower price, which is a bonus. The reverse is true for sell orders. In the short term, this can feel frustrating. You might check a stock and feel like your order always gets filled at the day's high or low. However, for a long-term, buy-and-hold strategy, the difference a few pennies makes on a trade is statistically negligible over a decade of compounding returns. The advantage of M1's automation and commission-free structure far outweighs the minimal difference from delayed order execution. The order window is a design choice that enforces a disciplined, long-term approach. It trades minor price precision for major benefits in automation and cost savings. With that said, thanks for watching and until next time.